Let's go then to our first speaker, Anthony. I give you the floor.
Bună ziua, Veronica. I want to start by thanking you and the American Chamber of Commerce in Moldova for inviting me. It's really a pleasure for me to participate in this panel, and I really look forward to the discussion. I have a short presentation, which I hope you will be able to bring on the screen, in which I want to give you a couple of points on what we have seen from the IMF's perspective globally, but also maybe a bit more focused on Central and Eastern Europe, what we have seen happening during the crisis and what we saw as the challenges before this crisis happened, and then after this crisis is over, hopefully sooner rather than later, what we think will be the challenges going forward globally, but also for the region. And if you go to slide number 3, yeah, this is the one. There's a couple of points I want to make. So first of all, in April this year, in 2020, the IMF presented its what we call the initial analysis of the impact of the COVID-19 pandemic and what we have called the Great Lockdown. In the beginning, much of the discussion we had centered around the so-called V-shaped recovery, consisting of a sharp decrease in economic activity in 2020, followed by a rebound in 2021 and following years, and hopefully without sustaining too much or persistent damage. Now, in the next 2-3 slides, I would like to comment on that based on what we have learned in the past few months. And first of all, it's important to understand that there is extreme uncertainty around the growth forecasts. As the economic fallout of the COVID-19 crisis depends on factors that interact in ways that are really hard to predict for us, and including the pathway of the pandemic, which is very different from one country to another, containment efforts, again, very country specific, supply disruptions, but also behavioral changes and the way people have reacted to the crisis and how they have changed their behavior. Second, the impact varies greatly from one country to another, but even within country groups, it's really interesting to see how even within the group of advanced economies or the group of emerging market economies, you see very big differences in the impact of the crisis. Third, what's important is that developing countries, but also many emerging market countries, are particularly vulnerable during the COVID-19 crisis for a number of reasons. And these reasons, they range from limited healthcare system capacity to access to clean water, but also the ability to enforce physical distancing in very large cities with high population density in developing countries, where many people work in the informal economy and are dependent on being able to work every single day to survive. Many of us in Europe are able to work from home because we have access to reliable and high-speed internet, but such connectivity is limited in many developing countries and even in some emerging market economies. And these countries are also highly dependent on demand in advanced economies for the export of their goods and services. Other reasons are the lack of fiscal space, especially for countries with very high public debt levels, and the dwindling access to reserve currency, either because sources of reserve currency drying up, for example, from tourism, or because it's becoming increasingly expensive to go to the capital markets. So in the baseline scenario that we presented during the 2020 spring meetings in April, we assumed that the pandemic would fade in the second half of 2020, and so that what we call the Great Lockdown could progressively be unwound. Now, however, it is becoming increasingly clear that other less benign scenarios are materializing, as the outbreak is lasting much longer than we initially anticipated, and it's forcing many countries to either extend lockdowns or even to reinstate lockdowns as infection rates are surging again. If you go to the next slide, I gave a couple of examples of emerging market economies in Central and Eastern Europe and in the Caucasus. And if you look at those numbers, the numbers seem to confirm the idea of a V-shaped recovery. So all countries are experiencing a sharp decrease in economic activity in 2020, and it's followed by a rebound in next year in 2021. But if you look carefully at the graph, there is an important caveat. And the rebound does not fully make up for lost activity. And by our estimates, it will take several years before economic growth will pick up with the pre-crisis trend. And this is what you see in the red circle on the graph. So even by 2023, we do not expect economic activity to have picked up with the trend. In some cases, we don't expect this to happen before 2025, for example, which means that the impact of this crisis is going to be very long lasting. And a lot, of course, depends on countries' responses to the crisis. We have, at the IMF, we developed a policy tracker on our website, which tracks the economic responses to the crisis country by country, including countries in Central and Eastern Europe. So if you're interested, you can go to our website and choose a specific country and see what actions they have undertaken to deal with this crisis. I would like to mention, though, you have to be careful when you compare countries with one another. And the reason is the automatic stabilizers. Previously existing automatic stabilizers are not registered as new measures. So to give one example, many of the measures taken in the United States as a response to the COVID-19 crisis, like paid sick leave, certain unemployment benefits, and so on, they already existed in many European countries. So if you go on our website, you will see that the US has taken a lot of new measures, while those measures haven't been taken in Europe because they already existed. And so what is considered a new measure to address the COVID-19 crisis in the US is not considered part of the COVID-19 response in many European countries, as these automatic stabilizers, of course, already existed as part of the social security system before the crisis. The IMF, of course, has responded quickly to the COVID-19 crisis, mainly through mobilizing emergency financing. All in all, we have approved emergency financing or new programs for over $87 billion in 86 countries since March to address the COVID-19 crisis. And some examples in Central and Eastern Europe are, for example, Georgia, Moldova, and Ukraine. This emergency financing will help countries to deal with, I would call, phase one of the crisis, which is the phase we are still in. This is to address the immediate fallout. The big question, of course, is whether this financing will be sufficient to deal with the longer term consequences, and whether many of these countries that have received emergency financing will have to come back to the IMF or other multilateral or institutions for follow-up programs to deal with the longer term implications. If you can go to the next slide, I would like to say something about the challenges beyond the crisis. What you see on this slide is what were considered by participants in the World Economic Forum some of the main challenges before the COVID-19 outbreak. And I can summarize them as four broad risks. The first being climate change, the second being economic confrontations like trade wars, for example, between the US and China or the US and the European Union. The third one is populism and increasing political polarization. It's an important one because it makes it much harder to pursue reforms. And last but not least, cybersecurity. Those were the four main risks that people saw as the biggest challenges in the months ahead before the crisis happened. So the question now is how much of that has changed since the COVID-19 outbreak. So if you go to the last slide. First of all, very important is, I already showed it on the graph before in the red circle, there will be permanent output loss as some activity will not return or may take years to return to pre-crisis level. Think, for example, about the travel and tourism sector, which account for about 10% of global GDP, but also the hospitality sector like restaurants and bars. This loss of permanent output will have a disproportionate impact, of course, on smaller states whose economies are often highly exposed to one or two sectors, or countries heavily dependent on tourism. The second challenge is that the new normal will look very differently due to physical distancing and increased digitization, which will impact the way we work with increased and more generalized telework in countries where that is possible. The way we shop, which will have, of course, an impact on brick and mortar stores in our cities, and the way we travel. And one should not underestimate the impact of increasing digitization. The more we work digitally, the more important cybersecurity becomes. It's no coincidence that since the start of the COVID-19 crisis, cyber incidents have increased exponentially. But digitization also has an impact on data and privacy legislation, and equally important on tax legislation. For example, how to define physical presence, source, and destination when people work more online and technically could work from anywhere around the world. Another question that we have been looking at the IMF is, should automation and digitization be taxed versus labor taxation, for example, as is mostly the case today? This will have a huge impact on tax income for countries, but also for individuals and the way we think about international taxation cooperation. Third, the public debt levels are projected to increase substantially as a result of the impact of the COVID-19 crisis. Public debt levels worldwide were already very high by historical standards as a result of the global financial crisis that started in 2008. And they have now reached levels comparable with those after World War II. And this raises questions about longer-term sustainability, but it also has an impact on monetary policy, for example. Even before the COVID-19 crisis, interest rates were expected to remain what we at the fund called low for longer, with inflation remaining below targets and many countries being dependent on very low interest rates to be able to refinance their very high public debt levels. Fourth, we probably need to rethink which sectors were deemed strategic or systemic. We have become highly dependent on global supply chains, which, as it now turns out, cannot always be guaranteed to be there. So it raises the question whether it would not be better to shorten certain supply chains, especially for critical goods like food and medical equipment. Also, during the global financial crisis that started in 2008, governments bailed out banks because they were considered systemically important. So to avoid the banks privatizing profits in good times and socializing losses in times of crisis, we imposed higher capital requirements and buffers on the banks. The question now is whether certain private companies, like, for example, airlines, are a systemic business. And judging from the billions in government support they are requesting, they seem to believe they are. But just like for the banks, being systemic also implies certain responsibilities, because many private companies requesting government support have for years optimized or evaded taxes, or they have spent billions paying out dividends or buying own shares. So if these companies are systemic and should receive government bailouts, then a discussion is needed on fairer taxation, higher capital requirements, and buffers to deal with shocks. And last but not least, the original crisis, the big crisis that we were facing before the crisis, didn't disappear. Before the COVID-19 outbreak, we were already facing one of the most important challenges facing our way of life, climate change. So in dealing with the COVID-19 crisis, we will have to ensure that once we go to the recovery phase, that recovery helps, or at a minimum does not impede the necessary transition to a greener economy. So if I were to conclude, I think the biggest challenge we are now facing is to make sure that all of these challenges that I've mentioned, that they add up. The ones we faced before the crisis, the new challenges we are facing because of the crisis. So how do we finance a more sustainable, greener economic recovery and transition, while at the same time ensuring that sustainability? So let me stop here. This is a very broad overview of how we see the challenges. I'm of course happy to answer any questions you may have.